financial regulators figure out how to manage the fallout of the Silicon Valley Bank failure.
First Republic Bank has become the second largest bank failure in U.S. history.
The banks are in a really tough state, and the past month has shown how volatile things can be. And we have the Federal Reserve and Janet Yellen saying, yeah, things are fine. And we have bank after bank going under. We have Silicon Valley Bank going out on March 10th, Signature Bank on March 12th, Credit Suisse on March 18th, and most recently we've had First Republic Bank go under on May 1st. And people have looked at these horrible news. You have banks going under, you have the worry about the financial markets crashing because of it, and people are running to buy into these stocks and look at them and go, I'd like a piece of that. Today we're going to talk about some of these stories that I've seen about people losing a bunch of money on stocks that could potentially go bankrupt, and we're going to talk about how we can learn from them. I don't want to point out these people losing a lot of money and show that, yeah, we're just here to laugh at them. We're here to try to learn from their mistakes, because I think a lot of people have a rude awakening the first time they try to buy into these volatile stocks. It seems foolproof when you hit the buy button, but then pretty soon after you realize that you've made a huge mistake, and we're gonna talk about some of the tricks that I use to avoid that at all costs. So we're gonna show some posts from Wall Street Bets and a couple from Theta Gang, which is kind of the offshoot of Wall Street Bets, but it's for the selling of options. And I wanna show some of the thought processes that went behind some of these trades, looking at these banks that have been rumored to go under for such a long time, and they look at them and go, yeah, I want in on that. So this person, Tangy Sword, said switch teams after taking a $21,000 hit on FRC, which is First Republic. Are my puts on PacW, which is a regional bank that was having a really tough time last week, about to burr? Basically, what they're saying is, I'll put up the post of how much money they lost. They were down 82% overall, or I guess 99%, where they lost $21,090. So they lost $21,000 on First Republic. And so what did they do? Did they look at their situation and go, yeah, I should, just invest in normal blue chip stocks? No, they went the opposite way. They started selling puts, or they bought puts on a regional bank that was potentially going to go under. And what happened to it? They're down 31% on that as well. So people view it as, one of these directions is going to go correctly. So if I'm on the wrong side, I should just switch sides. And these people are losing so much money because of it. And they took, they lost $21,000, so they had $150 left. And instead of just running for the hills and deciding, hey, I think I should start investing in the stock market instead of using the lottery, now they threw all of that money into an option that was likely going to be worthless because it expired today, or I guess yesterday on Cinco de Mayo. So they bought these really short expiration options and lost a lot of money on both sides of the trade. Here's someone who lost 55,000 euros, down 55% on First Republic Bank. And the thing that's really interesting is they post these losses on Wall Street Bets, and instead of being, getting people being like, hey, I think you should calm down, it's, you still have 45% of your portfolio, you might as well just let it run, see what happens, because you never know what's going to happen. You always see the meme of the person in the diamond mine that's mining forward, they're not finding anything, and they turn back, and what's this around the corner? Their diamonds are right there. And it's this attitude of you're just one trade away from taking your small amount of money that you've earned and quadrupling it, 10xing it, and it makes it so that people stay in positions a lot longer than they should have. To all those that sold puts on FRC and are holding over the weekend, good luck. Remember, it's only money. They sold a $1 put that expires on May 19th, and they're gonna go grab a coffee with some of that money. The thing is, when stocks go bankrupt, the people that are selling options on it, which seems like a great way to take advantage of the high volatility, they're losing so much money, because if the stock goes to zero, you just sold an option saying that you would buy it for X dollars, and people are going to exercise that once it becomes available on the over-the-counter. So you have people on both sides that are losing a lot of money. You have people that are buying the options that are expecting, one thing or the other to happen, and it doesn't. And then you have people that are selling options that think, maybe the stock is not going to go bankrupt. And this is a trend that I've seen where people look at bad news and they see it as being at a discount. I always talk about my favorite stocks going on sale, and I'm buying aggressively because I love the long-term potential of the company. There's a big difference between a company having poor earnings reports and having the risk of it going bankrupt, but people don't seem to view that. I've made mistakes in the past where I've looked at something like a Macy's and I saw it go down significantly, and I was like, yes, I want to buy into this. It's a stock that I think is going to do well. Well, the underlying business was really struggling. I just saw the percentage that it was down and saw it as a discount, and that is not the case. A lot of these stocks are rumored to go bankrupt, stuff like Bed Bath & Beyond and GameStop, which are in a really tough spot, and people viewed the potential of it increasing significantly to be worth the risk. Back in my day, options were used to limit volatility. People would be buying options to try to protect themselves if something happened in one direction or the other. Say you owned 100 shares of a stock and you're worried that it was going to go down significantly. So you'd buy a put just in case the stock market crashed, and you'd be able to sell it for whatever price that your option was associated with. People have gotten away from that, and it's no longer a hedge. It's used as a way to kind of buy a lottery ticket into the stock market. People are viewing it as, my stock is not going to go up 100% in a day, so I might as well buy these options because it has the potential to do that. Think about how people view lottery tickets. It's not the people that are well off financially that are doing it. It's the people that are usually low income that are looking for this home run play that's going to really significantly change their financial situation. And that's kind of how I view these options that are so far out of the money that they're pretty much worthless when they buy them. But they see the instances of it going up 1,000% in a single day, and they use that as a lottery ticket. And so you see a lot of people that are buying 0 day to expiration options that are going to be worthless by the end of the day. But there is that potential that something crazy is going to happen. A news report's going to come out and it's going to skyrocket. But most of the time, it does not happen. So what do I think are some of the causes of these increase in popularity of these options? The main one that I can think of is the rise of popularity of something like a Wall Street Bets, which has really glamorized not only the making of money based off of buying these options, but also glamorized the idea of losing money and holding it until it's become completely worthless. Anytime someone shows a 90% loss, they're like, oh, you still have 10%, you might as well wait to see what happens. And it praises the 1,000% winners, and it praises the 100% losers as well. And I think that's been a real change in the psychology of younger investors that are looking at this as a way to get rich. Number 2, people view their financial future as being bleak, and they see this as their best option. They don't think that, investing $100 per month is going to do a lot, so they're going to throw their life savings at an option that might make, 1,000% returns, but it also could have 100% returns or 100% loss. And number 3, it's a low buy-in compared to other ways of investing. If you have $100, you can buy an option. Some stocks you might not be able to buy a full share, and people view this as being the best option for them going forward, even though it has the potential of it going down 100% in a single day. Seeing these situations makes me really sad, honestly. Wall Street Bets originally was something that I looked at as kind of a, what are the youngins investing in, what's the next meme stock? And now I've seen it as such a negative of the impact that it's had on people investing in the stock market. It's no longer investing, they're just gambling in the market and are really glamorizing the process of losing 100% of your money. The reason I made this channel is because I wanted to show that normal people with normal incomes could invest in the stock market and make wealth that's going to allow them to retire early or do whatever they want to do. But I see people viewing Wall Street Bets as the better way to go because there's a potential that you could skip, the 20 plus years that it's going to take for someone using my strategy to build wealth when you could do it in like a week or a month. And it's really sad to see. I'm trying to make these videos and get them out to more people so that people view it as a possible option of building wealth and not having to resort to buying these lottery tickets disguised as investing in the stock market, because it's not investing, it's gambling. So how do we avoid getting into situations of buying these stocks that are going to potentially go bankrupt or have the incredibly high levels of volatility? The big thing is my rules is I only buy blue chip stocks. You will never see something like an Apple or Microsoft go down 80% in a single day because of one bad news story. And that really protects me from a lot of the volatility and the panic selling that can go along with buying into the regional banks that we've seen recently that have really struggled. And you see one news story come out and it tanks 25%, it's halted, and everyone's looking at it because it's not normal. But now the more banks that we see start to go under, it's becoming more and more normal. Buying into blue chip stocks allows me to avoid 99.9% of the stress that people that are investing in these volatile stocks see on any given day. I can look at my stock once a month and feel good about it, whereas people that are buying into these volatile stocks are probably checking it constantly, and it is incredibly unhealthy to look at the stock market that much. The big thing is that these options have 100% loss potential, and we're trying to avoid that at all costs. That's why I buy into dividend stocks, because on average they are going to be significantly less volatile than any of these tech stocks or the meme stocks we've seen in the past couple years, Bed Bath & Beyond, Virgin Galactic stock, you have Tesla. A lot of these very volatile stocks, dividend stocks, allow you to remove a lot of the volatility while still have the gain potential of buying stocks that have outperformed the overall market for the past 20 plus years. But people see the high potential of these stocks and they don't really see the loss potential. That's a really common thing you see is people always assume the best case scenario when in reality, the best case scenario does not happen very often. So the dividend snowball is my plan to build wealth for the long term while trying to avoid at all costs these high volatility situations where you might have 100% loss or you might just have a 50% loss. Be sure to hit the subscribe button. We're on the road to 10,000 subscribers. I appreciate all the support. And let me know what you think about this trend of buying into stocks that could go bankrupt in the future and kind of using it as a lottery ticket to see what happens. My name is Andy. If you made it this far, please hit that like and subscribe button, and I'll see you in the next video.